Hi and welcome to a weekly outlook. Sorry it's slightly late this week. I did record it yesterday and then managed to somehow delete it and well, anyway, here goes. So what I thought I'd do is do the summary sheet, run through my summary sheet here, which basically looks at the different aspects of the currencies. I'm taking a higher viewpoint when I'm looking at this weekly outlook. So looking at the currency itself, of course, I'm looking at the sort of from the bank's perspective, the central bank's perspective, which is this sort of first two columns here, and then looking at the sentiment from the larger traders. So it's a cotton sentiment, looking at asset funds, hedge funds there. So the asset funds being the big pension funds, and then the hedge funds, which are more aggressive in their trading quite often. And then looking at the key news out this week and the trend of where the market is. So doing this, and then I'll look at some charts afterwards. So as I say, slightly reversed, but just thought I'd give you. It's important to understand the bigger picture sometimes when you're, well, a lot of the time when you're trading, because if you're trading with a bigger picture, you've got more chance of trading with the big boys who are more likely to be making money than the retail sector as a whole. Okay. So just looking at the US dollars itself here, I've looked at the analysis on the US dollar, so you can look at the futures on the US dollar. I mean, people are still getting bullish and more bullish on this. I mean, it's going up. I mean, it's actually 98.6. I put 98 here, but it's 98.6. But they're not massive positions, but all the same, it's all long on that side and then growing. One thing I noticed from the central bank point of view, there's a nice gauge that I use on the CME site, which gives the percentage probability of an increase or decrease of interest rates at the next meeting for the Fed, and it's actually dropped down a bit from here. It rallied following the last meeting and the hawkish sort of comments coming from the last meeting, but since in the last week it's dropped down back to 69%. Still a high percentage of going up, but I think what they're looking at is the potential flattening of the curve, and maybe at some point looking towards the rollover, in which case the US dollar may start weakening, and there's potential that it will do going into next year. But for now, I'm still backing it as the stronger one of the pairs, logically, but for obvious reasons as we run through. But anyway. So let's look at the other pairing or the other currencies and look at how the pairs are doing. The euro dollar, they're still really, say, dovish is probably the best description there. They're looking to end bond buying in December 2018. We'll see as we in a week or so's time what the comments are coming out there. But things aren't particularly rosy. There's the inflation, things are not coming out as well as expected. Looking at the sentiment here, the asset managers, hedge funds, are starting to build their longs again. They dropped these down quite a bit, and these are starting to be built again. And the shorts are the hedge funds shorts are reducing. So there's sort of a slightly positive tinge there to the euro at the moment. We still have got the Italian debt situation that's not sorted out, and it seems to have slowed off a little bit and having a lesser effect as we've seen the euro push up a little bit. The monetary policy accounts are out, he says, looking at Thursday rather. And then we've got the French and German data, the PMI data out on Friday there. So these are the factors that could swing the markets a little bit more. At the moment, well, the euro's actually at a switch point here on the weekly trend, on the daily trend. It's broken the trend, but it's broken the bearish trend downwards, but not really put a convincing higher low or anything in there. So still iffy. And knowing what we do on the euro, on the dollar versus the euro, it's even with a slightly lesser inflation coming through on the US dollar, it still looks to me like the stronger bet. So there we go. So iffy, mildly bullish, I would suggest, as I said in my update this morning. But that could soon change. The pound, well, of course, short positions have actually been reducing here on both sides of the fence. Both the asset and hedge funds have been reducing their short positions here. And it really goes on terms of the way the pound's been holding up as much as anything else. There is a strong belief that some sort of deal would be made, I believe, looking at the markets here. We've got this week, and we've got inflation report hearings. But it's, I should have mentioned it, of course, you've got the core durable goods from the US, but more importantly, you've got Thanksgiving on Thursday, which also writes out Friday generally because it's Black Friday, and, well, a lot of people take it as a long weekend. So, all in all, I expect it to be a relatively quiet week, apart from possibly Tuesday, Wednesday, then running into the quietness. Even on the Wednesday, we often see a bit of a slowdown later afternoon. Anyway, so Brexit still sits there high. It's the high level. Are the votes going to come through to depose May? We'll see. But at the moment, inflation reports on the 20th, so that's today actually, isn't it? So 10 o'clock or 12 o'clock, but a report hearing. So that's going to be key later. At the moment, though, the pound does sit in a downward weekly and daily trend, and really, unless something happens, it's an opportunity to sell into shorts in my book. So I'm still looking more so to the downside. Dollar yen, well, ruled out near-term increases at last meeting. The short positions have sort of been increased slightly by the asset fund managers, but reduced slightly by the hedge funds. But it is still biased towards the short side. There's no significant news out really now this week or going forward. And where are we? We're still effectively in upward trends. You could argue about the latter here. It may be just switching over on a daily basis, but the rate is more of a range than anything else. It did look weak when I was looking at it earlier. We'll have another look in a moment. Picture on the Aussie dollar. Well, the monetary policy minutes came out this morning during the Asian session, and as what was said a long time ago, the next interest rate change is most likely to be the upside. Now, no real change there, but it's not been said for a while, but the markets are not really taken too much for liking to it. Interesting, the short positions, well, pretty flat still from the asset managers. Hedge funds have increased their short positions here, as we're seeing they're selling into the strength maybe that was been coming through. Aussie dollar, it has started switching on a weekly basis for sure, and on a daily basis it's been in a reasonable uptrend, but we'll look at that in a moment. Canadian dollar, it's a mixed bag out there with the Canadian dollar. We have the OPEC meetings out this week, which could affect many of these currencies one way or another. For the yen, they're a net importer. Higher oil prices can have a shocker onto their profits of and cause the weakness in the yen. Lower prices helps them. For the Canadian dollar directly, higher oil prices will certainly push the strength of the Canadian dollar a bit more. But for now, long positions are being reduced, short positions being reduced. So either way, the asset there's no absolutely obvious direction here from these guys. 50-50, they're in that sort of in-between zone, nothing significant. Overall, it does look like there's the potential to continue, and I'm still sort of in the bigger picture looking at the Canadian dollar to push up further. New Zealand dollar, it's still in that sort of bullish run. There's not anything out there I could see of real significance this week. Short positions are starting to be unwound here, which from the asset managers, although the hedge funds are sitting there quite flat on there. Still quite strong on the sell side here on both of these, so it'd be good to see those unwind a little bit more. But as they do so, I guess it will become less interest, or there'll be less momentum behind the upside that's been there. The S&Ps, I've just looked at that on here because I can have a look at the sentiment there. Obviously, it can be adversely affected by higher interest rates, and it can create bearishness within the equity markets as businesses have to spend more to borrow money, and has the effect on the bottom line. So as such, just looking at the sentiment here, the longs have started to grow again, or from the hedge funds, from the pension funds. Those guys are starting to be buyers again, net buyers. But the shorts are coming off, increasing as well, I should say. So we've got this sort of argument of where we're sitting at the moment. Now these hedge funds, as I said earlier, they tend to move quicker. They may be looking at capitalizing on the near-term rally that we've seen to sell into that rally. But really, we're still on that cross line of. In a sense, it's broken to the bearish side, but it hadn't put the lower high, and we may get a bit more of a picture on that. And certainly on a daily point of view, it looks like it's turning the circle again, the line again, and we could be heading south again. So there we go. So that's the big picture of where we are. Let's get rid of that and just look very quickly then through the markets themselves. So euro dollar weekly picture here. I did come back to weeklies and everything else, the monthlies, but basically you're sitting around that 113 area, and that's sort of a key line in the sand effectively with the euro. At the moment it's pitching above it. It's struggling a little bit this morning, but it did close out of that near-term trend. Got potential to run up towards that daily 50. I'm still looking and eyeing. There's a weekly pivot below us. Any reversals up in that sort of area, as I said this morning, I'm mildly bullish, but I'm not sure this is a convincing run with the euro. Maybe post next year, depending on what comes from the next central bank talks, but overall, I think this could head back towards that weekly pivot at some point. Okay, pound. Of course, there's Brexit, but I mean, looking at this, it's put a bearish pivot swing in there on the weeklies as well, testing these sort of lows once again. At some point, if it starts breaking beyond that 127 area, well, it's running out of support. You can see the support coming from these prior highs here on the left of the chart. If that breaks, well, then you're looking really back towards the prior lows at 121, somewhere in 30, somewhere in that region. So looking weak from a daily perspective here. Lower highs coming through again in this shorter time frame, and it does each opportunity, so every time it's rallied. I got a couple of decent ones last week where it rallied up, seemingly going to hit the moon, and then all of a sudden it stalls and sells over again. News from newspapers and comments coming out from the press are certainly less reliable and are being treated as such. So maybe retail traders are seeing those events, buying, thinking this is it, and then the big money's coming back in and selling back, and each time they're rolling over. And unless there's something more substantial coming from the Prime Minister's office itself, I'm still got to be a seller into big rallies. Okay, dollar yen. Dollar yen, I'm looking at this position here. It's still in an upward trend here, so still the dollar's still strongest. However, it is knocking on the door and has the potential to break that trend. It does have the potential, and this sort of daily, as I said, it's a little bit difficult because it looks like it's in a half decent downward trend, but it's not broken this trend line here. So effectively, it's still in an upward trend from that point of view. It hasn't put a lower high in or anything like that in this sort of price that I can see here. So we may get a rally, we'll see at some point, but it may just come back towards this trend line. It's quite a key trend line now. It's quite established there with the 100 moving average around that level as well. So looking still for a turnaround maybe there. Aussie dollar. So the Aussie, good solid week up there last week. Now I'm looking and thinking, well, it could run up to that weekly 200, which there is a possibility. It really depends if it's got the legs. It's got a bit of actually the RSI is showing, but oops, wrong one. Let's get the right one. There we go. RSI, although it's possibly worked that off, it's got the chance of still edging up there. I was looking at it. It's come back to its weekly pivot. I was looking at it and thinking last night even there's a potential buy sitting there. It just may be a bit of a tight range. It may be struggling. The other pairings are struggling. The euro, etc., are struggling. And well, if we start seeing the euro to become a little bit bullish, the Aussie dollar may kick up there back towards that daily 200. Okay, so that's where we are. Canadian dollar. Canadian dollar, it's now reached the bodies from this weekly point of view. I say last week it reached the bodies of these prior highs here, and it's maybe reacting off that sort of off those levels. A lot of traders sell into the bodies as opposed to the wait for the absolute highs, but it's still got the potential, I believe, to run up towards those highs there. Depends on what the OPEC meeting. What comes out of that, but if oil doesn't get boosted in terms of price, well, this may well bounce from where it is at the moment more. Okay, and finally the New Zealand dollar there for the currencies. Stronger move we've seen over the last few weeks. 3 solid weeks of rallying there, not too far away from that weekly 50, now weekly 200. Good points to see if we can hit those dailies. Obviously it's nearly into that 200, so getting close to a more significant resistance again now, but it's looked strong. It's ever since it broke out again at the beginning of the month there, it's looked pretty strong, and with those short positions being unwound gradually in the past there, it's probably helped it, but it's still got the chance of maybe pushing up some more. Okay, that's that. And finally I'm going to look at the S&Ps here. I'm just going to look at the futures. The S&P 500 is, that's what the market is, the futures, the COT report I was looking at comes from. The S&P 500, it's the sentiment on that. And a couple of weeks ago, so we run into the weekly 8 there, and we've sold off since then, and it's coming back to the dailies here. It's sold off last week right the way through, bit of a rally in, but it's caught the weekly pivot and reacted to that. At the moment it looks like, well, it could come at least back to those bodies, maybe further. I've got that old highlighted area, which is a zone of potential support that sits underneath there, so that's certainly a point where it could come back in the 126 area. But if you look at this whole retracement here on the bigger picture here, it's barely seen much, so it's as I say, certainly got the potential to come back to that 126 point. Okay, that's pretty much it for the day. Hope you have a great week. Remember, it'll be quieter trading at towards the end of the week. It's a bit of a bigger outlook this week in some respects, but hope you find it useful. Take care. Bye for now.